Alrighty, let's go ahead and get started. Welcome everyone to TradeFinder Live. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do have to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, or feel free to take a screenshot of it now if you like. That's the main point to take away. Other than that, the market is drifting higher while waiting on news between US and China negotiations, and Apple seems to underwhelm what was expected for this going into this trading week. So I'll pass over to the expert to further elaborate on that. Rob, you out there?
I am Zach. Happy Tuesday afternoon, everybody. Welcome to TradeFinder Live. Going to switch the screen here. And yeah, the market's drifting higher. We're going to show the chart here in just a moment, kind of what we thought was going to happen, what we've been talking about. Also talked yesterday during our Evo Trader Live segment that Apple needed to, in order to get a bit of a boost, come up with something in the AI world, and they didn't. They underwhelmed. They showed a few new things, but not what everybody was waiting for or hoping for. Don't really get it. All the money that they have, you would think they'd be out there leaders in the AI world. But again, Apple just continues to rest on its laurels and its stock doesn't move. Taking a look at the chart of the S&P, you can see that we are breaking to the upside. I've showed you of the multiple zigzags. If you're newer, you can look at the US market recording. Weren't able to do one this past weekend with scheduling conflicts, but the weekend before it showed how in this primary zigzag pattern, there is a complex zigzag or a zigzag in the C to make it complex. And then in that zigzag that makes this C wave complex also has a zigzag in it, making it complex. So there are multiple zigzags, all giving us the exact same target, which is that February high. And then we went through this little bit of consolidation here, clearly breaking to the upside. It's just a nice kind of breakout. This is what you like to see, that 45-degree angle that I talk about oftentimes. The reason that it's not as much fun as when things go vertical, but when you break out on a 45-degree angle like this, you tend not to get as significant of a correction. We are in a different world with any tweet or any comment, although I do think the market's getting kind of tired of the tariff talk. It's kind of old news now, but barring anything unforeseen, any corrective moves when you break out at 45 degrees seem to be less severe, less volatile. So this is a pretty nice move as we continue to drift up towards that target of the February highs. So again, three zigzags, all giving us the exact same target. Talked about that during the zigzag masterclass last week as well. I've not seen that before. And I've seen multiple zigzags with complex patterns, but I've never seen them all with the exact same target price. Again, that doesn't mean it's going to happen. Nothing's 100%, but you would think that puts a few more percentages in your favor. And for now, we drift higher. We are a little bit above the 10-day moving average, so any sort of a slight pullback would be not only warranted, but I think welcome. But nothing severe I wouldn't see coming out at this point in time. The danger was the breakout of the triangle. If we were to break back down towards 575, maybe breaking the 50-day moving average, breaking below 575, that's where the problems would have come in. Here's what's helping. Going to the bond market, looking at TLT, you can see that we do have prices up today and therefore yields down. Remember, TLT is the prices of the 20-year. Prices and yields move inversely, as you've heard me say in ad nauseum, but we get new viewers all the time. And so when the price is moving up, that means yields and rates are going down, and that's constructive for the markets. The markets like cheap money, and they're looking forward to whenever the Fed decides they're going to cut. Who knows when that's going to be? We're still looking at September at this point in time on the Fed fund futures, and the Fed seems very content just to wait and not rush anything, much to the chagrin of the administration. One thing that's interesting here, we talk about this every now and then, we get the old school patterns that come in. We talk about Ellie wave and zigzags and all of our other indicators, sometimes just a plain old uptrend where you have higher highs and higher lows. And I would submit that this is very welcome. If this C wave is complete, it did go to 138.2, not one of the high profile fib levels in my mind. I think 100% and 161.8 are more important levels, or stronger levels, I should say, not more important. All fib levels are important. But nonetheless, we touched that 138.2% level and started moving back up. And what happens normally when a zigzag completes, again, all the stuff we're talking about in the zigzag masterclass, is that C wave retreats back to the B wave. So we retrace the entire C wave is what happens unless you get an extended C wave, and we didn't want that. We didn't want that going down to 161.8 and starting to get a little bit too high on rates. That would have been negative for the markets. That likely would have caused a downside breakout out of that triangle on the SPY. But with rates calming down a bit here and being helpful and supportive, that's giving us this little bit of a drift higher on the S&P. I know you guys like to look at TNX, so we'll take a look at that real quick. You can see that on the 10-year, it's going to look the opposite because on the 10-year, this is showing rates. TLT shows prices, TNX shows rates. And you can see we're moving back down. We did have a little bounce here that we saw on TLT a couple days ago, end of last week, but backing off a little bit on rates, and that's helpful as well. So if we go ahead and take a look at the dollar's cooperating, drifting down just a little bit, but staying in this range. And as I've mentioned multiple times, as long as we don't take out this wave 3 low, which is possible because we still have a qualified note, it's still green, so it's not confirmed as a wave 4 yet. Meaning that we could bounce higher. We're only at 34% on the corrective move here. We could go up to 50, 61.8 and still be in a wave 4. But if we break that wave 3 low, obviously that becomes confirmed. And I don't want to see us lose the dollar. There's been a lot of shots across the bow with other countries not buying as many dollars, selling a few. I don't think they want to crash the U.S. market. We're the consumption engine. Other countries need us to buy their stuff. So I just feel like it's posturing, positioning, and just again, leverage type plays like President Trump is using with tariffs. So the fact that the dollar is hanging in down here is very constructive. So staying in the lower end of the range of where I like it to be, but that's also helpful to the markets. Let's take a look at the VIX because we did break down below that level that we were talking about at 17.5, and perhaps we drift down towards 15, which is the middle line there of those bottom 3 lines. So here's 15, and if we break that and start moving down towards 12.5, certainly that would be telling that the markets are continuing this drift to the upside. So with this kind of move left, is that enough to get us to that target if we break down towards 15, or do we need to go to 12.5 to reach all the way up to the February highs on the markets? But for now, a little less volatility, again, aiding that drift to the upside out of the triangle. And once again, just to reiterate, if you want a move to hold on a breakout of a triangle, that's the kind of breakout that you want to see. Let's take a look at the Dow. We'll look at the metals and we'll look at cryptos, which are doing well again. Here's the DIA, which is the one that I find maybe most interesting. The IWM is quite interesting. We have that as a case study consideration right now, moving higher. But the reason I say that is because it not only had a triangle, it's drifting up just like the S&P, but look at all this extra space here. It's got a lot further to go to reach those February highs than the S&P does. So do we get a point where we start to see the DIA or the Dow outperform the S&P a little bit? I think that's quite possible. and would be an interesting trade. So watching that very closely to see if that continues to move to the upside. The Qs, different story because they're so close to their February highs. They don't have nearly as much room to run before they're going to hit that resistance. And it's not just from the February highs, it's also from the end of last year. Basically the same highs. The February high just barely took out the highs from the end of the year. You can see not a lot of room here, not too much movement left on the Qs, and then we'll have to see what happens when we get up to that level. Now, if the Qs could break above their resistance level, then we could have something really going here with the Mag 7 trade. And, there's been some renewed buying in a lot of those. Maybe something really happens with the Qs and we get another big round of buying. But it's going to have to contend with that resistance level first before we can start talking about that. It's just a possibility to keep an eye on. So around 538 is where that previous high was, and that's fairly close. We're 531 and change now, so it's pretty close. And then the IWM, which is marching towards our target, up towards the 220 level, making a nice move. I know some of you didn't necessarily agree with this one, but it's working out pretty well. And one of the cool things about this software platform is, and by the way, if you haven't gotten a copy, hubb.com. Zach will be on at the end of the show. For those of you that have seen us, you know this. In the social media aspect, you can post an idea and let other people vote on it or make comments on it. And the community is extremely respectful. As Zach likes to say, differing opinions is what makes markets. And as long as you are respectful in any disagreement, it's always interesting, in my opinion, to find out people's thoughts. Oftentimes people feel differently than others. You can see that we have a little bit of separation here from the 10-day moving average and this breakout of this triangle. So the IWM had a triangle just like the SPY and the Dow, is a little more vertical. So maybe we get a little bit of rest here on the SPY, but we were looking for a move up here towards 220 and we're at 214 and a half. So well on our way to hitting that target, and it's interest rates that are helping that. Remember that and then we talk about the Qs being interest rate sensitive, but the market that is most sensitive to rates is the IWM small cap stocks. So that's being very helpful that rates are calming just a bit. So pretty nice move there out of its triangle on the IWM, but we'll see if it needs to rest a day or two. Let's go to the crypto space. We'll look at Ethereum first, so we'll switch things up. I've been talking about how maybe, just maybe, Ethereum outperforms Bitcoin because, again, all this clean air right here. The move down from 25 down below 20 was so fast and so vertical. There's no resistance in the way back up. And we can go to Bitcoin here in just a second, but I've been opining, questioning whether or not Ethereum may come back into vogue because it is lagging a bit, and perhaps some money rotates into that. Nozak talks about where money is going in crypto space, and Ethereum seems to be forgotten a little bit. We had the big run up with all kinds of buying into the ETFs, and then there was a pause. And we have this big move down because there was just a pause in buying. All that buying had occurred to create those Ethereum ETFs, and now perhaps we're getting some renewed interest. We are right at a point that's very telling. If we can break above this 20 level and hold it, you can see there's that little corridor of resistance going back from February. If we can break above that, then maybe Ethereum does outperform Bitcoin and really takes off. Taking a look at Bitcoin, I know some of you like the IBIT. You've posted that in the US market update. I've traded both. I prefer BITB, but I don't know if I could tell you why. They both are quite liquid and both have good liquid options. So I don't know that there's much of a difference. But you can see we are getting a breakout here on Bitcoin as well. but maybe Ethereum can outperform. It did yesterday, and maybe even with a big move up in Bitcoin and BITB, it was still a higher percentage move in Ethereum than there was in Bitcoin. So we'll see. Of course, Bitcoin is a lot more expensive too, so that plays into it, obviously. But we'll be watching both of these two, and we're getting into an area that's very, very interesting on BITB. The highs back from December and almost got there in January, and then we took it out. But another one of the rules we talk about all the time, got to have a follow through day. So we broke this resistance level, no follow through day, right back down. So we came back down to test this level. Perhaps that's all it was. It was resistance. We broke above it. Maybe we tested it. Old resistance becomes new support and vice versa. And now we're right back there again. So if we can break above this level and hold it this time with a follow through day, the cryptos might be off and running again. Both those charts look pretty interesting if we get some follow through with Bitcoin and Ethereum. So again, not calling for a big breakout yet. They've got to show me the old Missouri thing, but perhaps that occurs. And if we go to gold, GLD, had a little bit of a test of this triangle. And so what I did was widen out this triangle. I liked the formation a little bit more, but as I constantly say, because I'll get comments on, I don't agree with whether where you're drawing your trend lines, and it isn't. It's just like how we trade Elliott Wave at ewotrader.com. We trade it from a trader's approach, not from an Elliottian's approach. I'm not concerned with getting into the minutia of labeling. I'm looking for where is the pattern, the bigger pattern that helps in making trading decisions, along with other things, technical indicators, options, liquidity, etc. And same thing when I'm drawing trend lines of triangles. I just want to know if it's consolidating and a general idea of whether or not it's a symmetrical ascending or descending triangle, even though it doesn't matter to me that much because any triangle can break either direction. But we had this line down here, looked like maybe there was a false breakout and we came back in, but it does appear that all we're doing is forming a larger triangle on GLD. So something significant still to come, even after this big move in gold. But it could break to the downside. Just because this 4 is labeled, it's still green too, which means it's not confirmed. It's just qualified. Big difference between the words qualified and confirmed in Elliott Wave. And then we go to look at SLV, and there we go. There's the catch up I was looking for. It's done it. You've heard me. Had this big triangle here and was speculating or opining, again, use the same word multiple times, on whether or not SLV would play catch up because it had lagged gold so much. And we're getting a lot of questions on why do you think silver's been lagging gold? Well, now it is making up some of that ground with this big breakout move on SLV. Now you can see that we are overbought. We got out over here of the position at Ewo Trader because it was already overbought, and we're kind of consolidating in here now. And that's very constructive if it holds right here and lets the 10-day moving average catch up. One of two things is going to happen. Well, one of three things. Either we come back to the 10-day moving average, or it goes sideways and the 10-day moving average catches up, or a combination of the two, which is the third one. But this will get closer to the 10-day moving average. No security in any time frame gets too far from the 10-day moving average for long. Probably the number one rule in my trading arsenal, and a lot of our subscribers have picked up on that and utilized it and talked about how helpful that's been in their trading, both on choosing entry points and exit points. Now let's go to energy. We'll take a look at natural gas. And when we look at the chart of UNG, even though they had that big special on CNBC last week where they had Brian out in um, Alaska talking about the new pipeline, et cetera, and all these things, still can't put a bid in it. And a lot of people are saying, well, that's because it's going to increase the supply. And that's true. And perhaps we're going to have more supply than the demand. There was a doubt about that when we had this big move up here. when all of a sudden the realization came that all the data centers are going to use natural gas. But now we're starting to look at it as, well, maybe maybe we have enough supply and demand is not going to create an upward move in price. That's what the markets are. The supply and demand based on fear and greed. That's the definition of what the markets are, period. And so if we're going to increase the supply here, it's going to be difficult for UNG to make a move. We've had this up here for a while, wondering if we were going to get an impulsive move. Notice what's happened now. The pattern has completely relabeled. So I'm going to take that off. And now we have a 5-wave to the downside set up. So the upward pattern relabeled. Maybe that was a little bit early with this triangle, but we are trying to break out of it. But I'm not going to argue with the mathematical algorithm and 20 pages of mathematical code. But we are going to take this off here and get rid of that because obviously it's not a question anymore when we have this. Now, I guess I could have just moved it down and say a possible impulsive move to the downside on UNG. And it does look like it's wanting to break out. And so the thoughts of all the supply, I think, are outweighing the demand as we just went through. Now, oil's a different story. Oil breaking out to the upside here, clearly out of its triangle. I really wanted to put a strangle on USO for our subscribers, but it just wasn't. The options just to get the right strikes. There's a lot to options other than just liquidity. I look very closely, as you've heard me say before, on the delta gamma relationship and the acceleration created by having an ideal set of delta and gamma levels. And to try to get it where I wanted it, it just didn't work. So we watch when you can't create it with the type of setup that you want. We've done USO before, but it just didn't set up real well this time. You wait for the breakout, and just to give you a heads up, Zach, that is going to be our case study consideration for this week is oil moving higher. Now, I'm not going to say that we're going up to 80. I don't necessarily think oil moves that high. We're going to look at 75. And I know it's not that big of a move, but I do think that oil stays in this range between 70 and 80 throughout the balance of the year. It may break above 75 and run all the way to 80. It may very well do that, but it will have a little bit of resistance there at 75. It's a tiny bit overbought now. You can see it's down near the low of the day from where it started, but that's a breakout with follow through. That's what we're looking for when I keep talking about a follow through or confirmation day. That's what you want. It tried here and didn't get the follow through, and now we have it. And so I think oil continues up towards that 75 level. I think that's quite likely. So that will be our case study consideration. As I mentioned earlier, Zach will be back at the end to show you how to post an idea as he posts that one. All right, so we've been through the metals, we've been through energy. Let's go ahead and take a look at some of the movements around the world with different countries. Again, we weren't able to do a U.S. market update over the weekend. Again, that was scheduling related. So apologize for that. I enjoy doing those and reading all your comments. So we'll catch you up to date on what's going on internationally. We haven't done a whole lot of international stuff on the U.S. market updates anyway, because we get so many symbol requests in an effort to save time. We do it here during TradeFinder. So taking a look at this movement here, it seems destined, been saying this for a while, that a break above 26 is going to send the EWA up to its next level right there at 27. You can see that was resistance going all the way back to September of last year. And by breaking through this level here at 26, which was resistance from the end of last year, there's nothing to stop it from going up there. And as long as the markets stay calm, we'll continue higher. Note there's no Elliott wave pattern labeled here. That means this is one big impulse right here. maybe there's enough of a correction there to label something, but I'm not sure. This is just going to be all one big impulse, I think. And it's going to be real interesting to see what the labeling is when the algorithm decides that the points are within it. And for those of you that sometimes say, I don't agree with where you put your Elliott wave labels, I don't. I don't label the charts. I do draw the zigzags because I like to do them myself rather than automatic because they're all over the place. And I like clean charts. And if I just want to look at one zigzag, I don't want the ABCs from the flats and triangles and everything else all in there. To me, it's too much stuff on the chart. The cleaner the chart, the better idea I get out of it. And I'm pretty good. Visual spatial is uh, something that I'm good at, and recognition. And so the cleaner I can look at the chart, the better. So that's Australia. And I've been joking about this movement in Canada where they don't seem to care about all this tariff stuff. They've just been running up ever since the tariff tantrum low that Zach coined months ago now, just straight up. Now we are getting to the point where we might be running out of steam because when you look at the ADX, you can see in the DMI it's above 45 and the positive directional indicator is moving down. So I think we're running out of steam on the move in Canada, and perhaps we need to have a wave four pullback. We'll see if this just calms down or if it turns down. Remember, the way the ADX works is if it breaks below 40, that tells you it's an exit. When it breaks above 40, it tells you the strongest part of the move is over, but it doesn't mean the entire move is over, only the strongest part. It can still go higher, but you know how this works. The higher it goes on less and less strength, the closer you're getting to a corrective move. I like the analogy of a rocket going up into thin air and running out of propulsion. What's going to happen? It's going to turn and come back down. So that's what happens when you get that ADX moving above 40. And it's just a matter of time before some sort of a corrective move occurs. If it does turn, there's a rare opportunity, a rare chance that you see this sometimes where the ADX will just level off up here, and then that means it's a move of continued strength. It doesn't look like that's going to play out based on what the positive directional indicator is going to do, but I just thought I'd throw that out there because it does happen from time to time. It's pretty rare, but it does occur. And now let's go ahead and take a look at Germany. And we had the German chancellor at the White House last week. And another one of the markets just kept on going. But we've been talking about this, gosh, for a couple of weeks, even as it continued to go higher. But we're in the upper end of this tap box, time and price projection. And so that's a likely point of resistance. We had 121% extension on the wave five, so it's very extended on the move. And talked yesterday during EWO Trader Live that maybe we take a little break here on the German market. At some point in time, the ECB is going to stop cutting rates. As I've mentioned before, they're ahead of us. They've been cutting rates for quite some time, but they're not going to cut them forever. And so maybe this is the point where we start to get a corrective move following the completion of the wave five. I'd be very weary of trading the EWG right now. Taking a look at the Nifty for our friends in India or that follow the markets in India, you can see that we are just still consolidating right here at that 100% extension. So we have relabeled on this chart as well. And that's because we took out that level just ever so slightly. But this 100% level that's here, and I'll be taking that off soon, was on the retracement when we moved back up to that previous four. And so now this is more than just a corrective move. It's been labeled into a LA wave, five wave pattern. We have taken out that wave three high, or that five wouldn't be there, but it's only a 24% extension. So maybe after about a month of consolidation here, right under this resistance level, we're going to break out again. So If you like the market in India, if you're long the Nifty or the INDA, I would get my trigger finger ready because any sort of continued move higher, and we're probably coming up near this tap box. So I'll leave the shadowing on for now. That's the fib retracement shadowing. I'll leave that on, but maybe this weekend that will come off. We'll have to see if the market in India continues moving higher, and then we'll go take a look at China since that's the news right now. U.S. and China meeting and talking, and the markets are going to react if there's any sort of news that comes out regarding negotiations other than pausing. I think the markets are tired of the tariff pause too. The markets are ready for details. They want meat. They want to know that deals are being struck and not just being put off. And depending on whether or not these meetings are successful or not is going to have a lot to do with not just our markets, but the FXI as well. But we had that coming up towards 3750 and we're almost there. So that's been a pretty nice move up and expected. You can see the zigzag here. If I draw the zigzag, perhaps there's more we can go here with this level. It was not a big pullback. It only went to the 23.6% fib level. So you don't necessarily look for big, long, extended C waves when it only bounces. Elliott didn't like that. He didn't like B waves that only went to 23.6. He put it in an algorithm because it is a fib level, and fib levels work as support and resistance, and we could have a bounce, which we did off that. But he much preferred, if you're going to trade a zigzag, for that B to come down past 30%. He wanted it to get closer to the area of 38.2. He doesn't trust this level. And the fact that we're nearing resistance, maybe we shouldn't either. So we'll wait and see how that plays out. But for now, we're just anything could change there on the FXI as soon as we get news on the success or failure of those negotiations. All right, Zach, with that, happy to take some questions before we post this week's idea on USO.
Sounds great. Let's get right into it. We've got a question here on MSTR from JN.
Well, that's another way of trading Bitcoin. As you know, they've basically leveraged the entire company on Bitcoin. They've increased their float. They've issued a ton of debt. I did forget what the business model was before. This is a Bitcoin play now. And so if you don't like one of those other two ETFs, the ITBI, let me try one more time. IBIT or BITB, trying to get the initials in the right order there. This is another way that you can trade it, and it's optionable as well, as I'm sure you know. And we have a little tiny bit of resistance here. And if MicroStrategy can break above this 400 level, it's coming up to 425. I don't think there would be any doubt of that. And then it may bump its head a bit at that wave 3 high. There's a wave 4. Elliott would be much happier with this level, even though it's not confirmed yet. It's just qualified. We also tested the 50-day moving average numerous times. So I would be watching this very closely. A good break above 400. We're going to 425. And then if it could somehow break 425, MicroStrategy's off to the races. So I think you're watching a good one there. I wouldn't pull the trigger today if it was me, but I would be very close. If you're already in it, then there's no reason to get out. But if you're looking for an entry, I would be just a touch more patient, let it get above 400 first.
Next up, we have Lori for LLY.
Gosh, they were talking about Lilly on financial networks this morning. They said basically their quote was, there's Eli Lilly, and then there's everybody else. And they talked about all the things they have in the pipeline. And you know how these drug companies work. There's all this anticipation. They go through all the trials, then they get to the phase 3 trials, and sometimes they work, sometimes they don't. When they do, the stock explodes. When they don't, it tanks. Very difficult to trade drug company stocks. But if you want to be in this space, this is the one to be in. I don't think there's any doubt about that. The only issue here was the wave 5 didn't quite take out that wave 3 low. Had it, I think that would have been a golden entry. Instead, it just came down and tested that level, which means that if we continue high, much higher from here, this is going to relabel too and move to the upside. Part of the problem was this 5-wave pattern didn't count anyway. It was disqualified because that was an 88% wave 4 correction. So that tells you why it only tested those lows that were labeled as wave 3 rather than breaking below them. So a good little support move here. Didn't quite give us the launch pad effect there, Zach. It needed to be a little more sideways, but look what else is occurring. We are about to get a bullish 1030 cross right there. Maybe a little bit overbought on today's high, but yeah, if you want to be in this space, this is the one to be in. And if we look at the DMI, I like that the ADX came back down to 20, curling back up. Would be great. We're getting good separation here. So it's not an ideal confirmation on the DMI yet, but it looks like it could be setting up. But yeah, I think Eli Lilly probably goes back to those highs, barring something negative coming out. And that's always the danger of making commentary on these drug companies. But if you look at what they have in the pipeline, it's pretty impressive. And an Alzheimer's drug is in line too, which you can imagine what that would do if that actually makes it to market. So yeah, man, you guys are on good stocks. That's why I love TradeFinder. I say this every week because this community, man, you always pick good ones to look at. You ought to tell your friends they come join this. You guys are great.
No doubt about that. Follow that up with MU.
Micron, one that I think I mentioned last time we looked at it. I used to trade this stock a lot, and it just seemed to get forgotten for a while. Look at how long it went sideways. I mean, it just did nothing for a year, which was crazy. And then it succumbed just like everything did on the tariff tantrums. When you have a move like that in the markets, pretty much everything goes with it, which we've seen. But we're breaking out nicely. This is the key. I think this is what I mentioned last time. If we could break this level, this resistance level that lasted for a year, we might have something really special going on Micron. So I like this. It's a little bit above the 10-day moving average. I would have preferred a couple more sideways days here before this break. You know the rule, if you break resistance and you're already overbought, there's a higher probability it doesn't hold. It doesn't mean that it won't. It just increases the probability that the breakout doesn't hold and we come back down. So we'll have to watch and see. Again, a couple more sideways days, and then today would have been great. But for now, it's looking to break out, see what happens tomorrow. Maybe it'll pull back a tiny bit tomorrow. Wouldn't be an official follow-through day, but it would be pretty darn close. Well, let's see. Yeah, today's the actual follow-through day because we did break above it yesterday. So yeah, it looks great. I just wish it would have consolidated a bit more first, but I'd stay on that one too, even if it pulls back a little bit. I think there's a ton of pent-up demand and catch up to be played here with the fact that it just went nowhere for a year. And then if you look at the DMI, you'd be hard pressed to design a DMI that is showing more confirmation of strength than that. That's gold right there. And that's just as good as it gets. So yeah, another one. You guys are on all of them today.
Indeed. A couple of big symbols from Manuel. First one's going to be Amazon.
Well, you know my take on Amazon. I talk about this week in and week out. I'm a believer that Amazon is a buy on any weakness, and it'll be that way for a while. They're in everything. They do have some clean air now that they're breaking above that high from May. We do have technically, but just barely still, a qualified zigzag pattern to the downside. I'd be shocked if that plays out. Something really nefarious would have to come out because they just keep expanding their arsenal. And I don't see anything stopping them. All markets correct, all stocks correct from time to time. Um, Great opportunity to buy it back when the tariff tantrum occurred. But there's nothing stopping Amazon from going up to 240 now. Again, clean air, because that moved down. It was very vertical. So there was no corrective moves in that move. It was a straight mono wave A. So it just went straight down, and then that means there's no resistance in the way. So I think Amazon hits 240. I don't know when it'll occur, but I think it hits it, and we just have a tiny percentage chance with that Elliott wave pattern holding. I would be surprised, but it's a possibility until it relabels. But for now, looks pretty darn good.
Followed up with another behemoth there of Netflix.
Golly. Um, they just they continue to fire on all cylinders as well. And when they had such a great idea, and they came out roaring, Blockbuster just missed the boat. Blockbuster could have owned this space, and they didn't. And Netflix came in and swooped them up, and they're getting into everything now and expanding as well. They're buying somebody, or there's speculation that they're buying somebody. And so that's pulling it back down a little bit today. That always bothers markets on what's the cost going to be of acquisition. So maybe we come back down, and you could certainly argue that after that run, a little bit of pullback is actually okay. And I was getting uninterested in Netflix because it had just run so far. But if it's going to come back down a bit now, and get anywhere near the 50-day moving average, because you can take this line, and this is why I say it's an inexact science on exactly where resistance is, because you could draw it anywhere through here because we traded through this level back here in May. So it creates congestion rather than a definitive support resistance area. And you could argue that that could come all the way back down to the 50-day moving average. If it made it back down to the 50-day moving average, I would be interested in Netflix again. Um, Today is a good start, but it just got to the point where it was in nosebleed area, in my opinion. And so I think let's give that one a few more days and see what happens. Let's see how far this corrective move is.
Stock APLD for Allen.
Uh,
APLD as in Delta.
oh, sorry. Applied Digital. Um, had that big vertical move. Perfect example of the rules that I talk about all the time. What goes vertically up, oftentimes comes vertically back down. Nothing gets too far from the 10-day moving average for long. So we're correcting that right now. Now the question is, how far back do we come? Let's take a look at the volume. I always like to see if there was a lot of volume behind that. And in this case, there was really good, solid volume there. Some people took some gains real quick, but we just need to find out where it's going to find its support level. So I would watch this one too. It has the possibility of coming all the way back down here towards 10. And if it does, that might be an amazing buying opportunity. If it comes down there, it may not get that far. The 10-day moving average is getting closer, so it could find its footing at any point in time here. But I'd stay on that one too, but not today. I would wait, keep an eye on it, and see how far down it comes. perhaps even wait till it touches the 10-day moving average again.
Couple of symbols from Alexandru. First one's going to be GNRC.
Generac, and company you're quite familiar with in Florida, Zach. They make when we lose power, they make the what's the word?
Backup generators.
Generator, yeah, the generators for backup generators when power goes out from hurricanes, and setting one up to run on natural gas is a golden thing to do in Florida if you're along the coastline. Anyway, this is breaking up. It's got some more congestion here. It looks like it's had a really nice curve back to the upside on the 10-day moving average. That's why you always wait for definitive breaks between the 10 and 30. It was moving down. A week ago, looked like maybe it was going to get a bearish cross, especially on this move down, but it didn't. It caught itself and curved back up. It's going to have a little bit of a rough go, I think, because of this congestion, but it seems like it wants to go higher. Look at the level of this wave 5, 150%, which means we're only looking for a 61.8% correction. So here's that shadowing on the fib retracement again that I was showing on the IN or the Nifty market. So it does seem like we're heading back up at least to 61.8 on Generac. It may be a little bit of back and forth to get there as it weaves through this congestion. But with the completion of a wave 5, that's where it's supposed to go. So that's your target price. There, you just might have to be a little patient with it getting there. Or you just blow right through it. And sometimes it does that, but it wouldn't shock me to see some back and forth on the way up.
From there, let's head over to Goog, Goog.
The Goog. I always love it when you ask about Google, my favorite stock that I had to kind of just let go of for a while, but now it seems like they're void of all the constant regulatory pressure that was being put on them. And we got a nice little zigzag there. So I'm going to take all this stuff off here and draw the cleaner one. We'll even take this arrow off. Okay, you can see the zigzag pattern right here. And that 5-wave pattern's disqualified because it was 87%. With a 36% right at the 38.2. We're almost to the target here at the 61.8% level on today's move. I'm likely going to hit that. We're a tiny bit overbought today, but that could follow through to there tomorrow. And then when you see this, this is one that you start to look at, okay, is this one that's going to have an extended C wave, which would bring it up to the 100% level. So that would make this the target. But remember, that's the first target. And then this would be the second one. So this is when I go to the DMI specifically to see what it looks like. And that's almost as good as the Micron one that we were looking at as far as being set up really well. So I think Google's ready to continue higher as well. So Micron and Google, two very good stocks to watch on the likelihood that they continue to go up.
Let's look at BIDU for Harry.
Baidu, we haven't looked at that one in a while. It's anything China related is subject to whatever news comes out. You can see the consolidation. The ADX is actually confirming consolidation because it's very low. So we're just going through sideways. Alibaba's doing the same thing right now. Not the greatest triangle, but you could make an argument that there's a little bit of pattern of higher lows and lower highs. You could even make an argument of going all the way back there if you wanted a real big one. So Baidu, Alibaba, those are stocks to watch along with the FXI. if we come out of these meetings with some sort of an agreement that the market likes. So those are tough right now because they're going to be affected short term by the news.
Very well. Let's head over from there to, um, sorry, I just lost where I was. FICO, FICO for lie.
Okay. They were talking about this last week too. I forget what was there some regulatory stuff or something? There was some really negative news that came out, and you can see what happened. But it did catch itself down here around 1700, and if it can consolidate this move a little bit more, maybe becomes interesting. But the problem is the next level of resistance is right there at 1800. So there's not much room. Very expensive stock to trade. Interesting to watch. But for me, I would become interested because of the vertical nature of the move down if it could break above 1800. But that might take some time when you go through what this stock did. Maybe just watch that and see how it handles that channel because it's one that would be fun one way or the other. If it breaks above 1800, it's a long. If it breaks below 1700, it's a short. So I would keep an eye on it, but not, I wouldn't, personally, I wouldn't do anything in this channel. I would wait for a break of one of those two trend lines there.
Ready, and I see we
All
are
right.
coming up at time, so we do still have some outstanding questions, but as always, you've been generous enough to dedicate this hour of your time for free for your analysis. So we might take this time to pivot over to the platform, and I'll post this week's idea.
Sounds great. Yeah, and we did get a few extra minutes. I got through the symbols pretty quickly, so we got a few extra minutes and of Q&A and some really great stocks to look at.
No doubt about that. All right, so I should be taking the screen now, and we should be redirected to the platform. So this is a menu view, a jumping off point of everything that this extensive platform has to offer, and going to have some more exciting news to share around this platform here shortly, which I'm sure Rob will dive into once that's available. For this week, though, Rob, is this going to be an official idea or a post?
It's only going to be a post because you can see the CCI there is kind of rounded off. If this ADX would have been above the negative directional indicator, then it would have been an official idea. But because we don't have the technicals backing it, we only post ideas when the rules are followed. And again, that doesn't guarantee anything, but this is just going to be a post.
Very well. Well, who knows? Maybe after this post this week, the criteria might be fulfilled and we'll make it official idea next week if there's not a more viable case study consideration. So not
Well,
going
that's
to
going to interrupt you, Zach, because that's actually a really good point. Um, we'll keep an eye on it. I'd mentioned earlier that perhaps it breaks 75 and goes to 80, or maybe this is just a bounce to 75. So it could be a post this week, but if it gets up to 75 and then the DMI forms and all of a sudden our rules from our indicators that are confirming kick in, it could switch to an idea next week. So that's well said.
very well. And so, not to reiterate what Rob said before, but as you can see, these are all the ideas from our ever-growing community where we welcome you to come in and agree or disagree and share your supporting evidence on either side. Obviously, just staying considerate of the community in a respectful way. And again, whether you agree or disagree, please feel encouraged to submit that feedback or thoughts, hypothesis, but just make sure to support your opinion there. So, as Rob mentioned, this is going to be a post, which is essentially a discussion before the criteria for an actual idea is met. So we will come back and add some more information around this very shortly after this session concludes. But for now, I'm going to go ahead and make this post, and that I think about wraps it up for this one, for this session. Short and sweet with it just being a post. There's not much more detail to go into, so I'll pass back over to you, Rob, to add your final thoughts and thank everyone that took time out of their day to join us live.
Yeah, right as we're wrapping up, there was a tick down in the markets, spike up in the VIX. I was trying to see if I could find a headline for you real quick to see if perhaps there was something that wasn't as positive as hoped coming out of Washington, but I don't see any headlines. But um, we'll keep an eye on that and see if that's an outlier um, or if it was just breakdown in the talks, etc. So thanks as always for devoting your valuable time. We appreciate it very much and love doing this session. And again, go tell your friends. Let's build this community because you ask such great questions. It makes this a lot of fun for me to do. So thanks for taking part of your trading day out. Zach, thanks as always, and have a great rest of your trading day. And we'll see what news comes out this afternoon and then where we wind up by the weekend.